Today is April 21, 3:51 p.m. Less than 10 minutes and the market closes. We saw unusual options on Uber. And you'll notice right away that it is down 2%. This very long shadow here, it did drop down to 29.68, and it has rallied back up to 30.8 now. So potentially this support is holding. And keep in mind, earnings is coming up. So that's on May 2nd. So without further ado, let's take a look at those unusual options we saw. So just at 346, you see this here. This is less than just 5 minutes ago, right? 2,000 contracts here at the 29.5 strike puts. We were talking about that level, bouncing off that level. So that's expiring on April 28th. We also see this 30 strike puts, 5,000 of them here. So let's kind of go over that, and also we'll go over the trade that we did instead, because it takes less buying power. So those Septembers, when we look at that, these are actually over here. They're actually, the volume is actually less than the open interest. So these could be closing orders being transacted. So what we're going to look more towards is this April 28th, because here you'll see at 10:15, we'll also see this 30 strike puts and then this 34 strike calls. So that's very interesting here. When we look at the option chain on April 28, which is just 7 days away, you'll see these the volume here at the 30 strike puts is 6,000. This is much greater than the open, so this is an open order here. And that 34 strike call here, also greater than the open interest, so also opening orders. So we believe what they were doing for this trade was they were selling the 30 strike puts and then buying the 30 strike calls. So that creates a synthetic bullish trade. This is the expiration date, so their break evens are actually all the way here. They only have one because they collect a credit of 25 no matter what once they put this trade on. And so as long as it doesn't drop below 29.75, they're going to be profitable. And this makes sense on the technical analysis, because like we were talking about, this candle here today dropped down here to 29.7, and then it bounced up from there. So they believe that this is going to not within 7 days, it will not drop below this. And so what we can do is create a stop loss here, something a little bit maybe over here, and create an alert so that if it drops below there, then these unusual options, this strategy, maybe we have to take our trade off. But then that is our protection for this trade of these unusual options we're seeing, right? And so they will be profitable as it goes up, especially above 34 here. And during this time, So what we did for our trade, because we did not want to spend that 3,000 in buying power by selling that put, because that's like saying you're going to own 100 shares at $30 per share of Uber by selling that put. So what we're going to do is we're just going to do a 7-day bull call spread. And so we bought the 32s, and then we sold the 34s. The 34s, if you remember, this was the one that they were buying, and that's why the volatility is actually higher, 38%. It's so it's actually higher than the call that we're buying here at 32, at 33. So we like that, to buy at a lower volatility and sell at a higher volatility. So in that way, this is what we're getting. Let's analyze this trade. This is going right now. Right now, you'll see it is currently for $17, and you'll see that max loss is that $17. However, if it does go above that, about $32, it will start becoming very profitable, all the way to 183. You'll see, right? So this risk to reward ratio is very high, and that's why we like this trade. 183 divided by 17, that's close to a 1 to 10 ratio. So it's risking 1 to make 10. You can potentially make 10 from this trade. That's 1,000% of profit here if it rallies, right? So we like this trade. It is before earnings. Keep that in mind, because earnings is in May, and these options expire on the 28th of April. That's why the volatility here is less, because this is actually not over earnings. Earnings is on this date. That's why it's higher on May 5, because that's the date after earnings over here. That's May 2nd. Okay. All right. Hope you learned something. If you did, please smash that like button, comment below on what you think about this trade, and whether or not you think Uber is going to bounce from here and that it had bottom here today in these next 7 days, and that we are expecting either it consolidates or it goes up, but we don't expect it to drop below this level anymore. And that's what the unusual options are telling us. That's the main thing they're telling us. Not necessarily that it is going to rally, but that it has bottomed, because they were selling puts, and selling puts is not it's not very bullish, it's moderately bullish, and it tells us that. So please subscribe if you haven't, and hit the bell icon. You'll be notified when you see these unusual options. Take care, everybody, and good luck.